Hey, this is Tom Nash, and welcome to the Value Investor by Tipranks. And I'm sure a lot of you are wondering right now what to do with your portfolio. The market has not been kind to us lately, and I'm sure all of you carry massive losses over the past year. Everybody's feeling the pain. So the question is, should you cut your losses now and get out, or do you stay in? Now, I'm not going to pretend like I know the answer, but I will give you tools in this video to figure it out for yourself using statistics and objective data. Let's get started. Just the other day, I had a conversation with my friend, one of my childhood friends, and he was telling me, look, Tom, my portfolio is absolutely hammered right now. But, I don't want to sell at this bottom. What do I do? Do I stay in? Do I sell? What do I do? Now, I'm going to tell you what I told this guy. First of all, I don't know. It's your decision. But I will share with you my outlook as far as where the macroeconomic conditions are and what's happening in the stock market right now, so you can make the decision for yourself. I'm not here to give you fish, but rather to teach you how to fish. So first of all, let's talk about the conditions that led to this crazy bull run we've seen during the COVID pandemic and thereafter. And the combination of low interest and low inflation allowed this craziness to happen. The inflation part always comes later. Inflation is kind of like a hangover. You know, when you have a few drinks, you're feeling absolutely amazing, everybody's happy, you get another drink and another drink and another drink, and at some point the inflation kicks in and you're like, oh wow, this is not good. So inflation is kind of a lagging indicator of drunkenness, and right now we're feeling it. Now the question is, will these conditions ever be back again? Will we have low inflation and 0% interest or close to that in the near future? Because most of these stocks that got absolutely hammered over the past 6 months, they need those two conditions to be back at where they were. Now, obviously, nobody knows, let's be honest, but I don't think this is very likely. For that to happen, we'd need oil to go to around $40 to $50 a barrel, which seems to be very far off of where it's at right now. Crude is currently above $100 and seems to be poised to stay there for a while. There's the war in Ukraine, there's the OPEC production issues, there's the Saudi-US relationship. There's a lot of different negativity in the market right now that prevents oil prices from coming down. Now, if that's the case, inflation is actually more probable to stay elevated than to go down. And in that case, the Fed will have no choice but to keep raising interest rates. That's just how the game works. So these stocks that have been absolutely beaten up are not in a position to actually rally back into their all-time highs anytime soon. Now, will they have a short burst, like a quick rally right now of a couple of weeks? They might. You know what? They might even go all the way to April 1st highs. Maybe. But the question is, long term, over the course of the next 12 months, 18 months, is this going to be the general direction of the market, or are we heading downstairs? Now, look, I'm going to be honest with you. I don't know. Nobody does. I'm not going to pretend like I do. But here's a few statistics and objective data that you absolutely need to hear. On December 27th, we had the Santa rally. Everybody was ecstatic. We got some Christmas gifts. But ever since then, we just got grinched up the wazoo. 6 months of absolute trash. Now, the S&P 500 over the past 6 months did negative 19%. Now, it's just on the brink of bear market definition, which is negative 20, but let's just call it a bear market. And if you go back in history and you look at previous bear markets, you'd find out that over the past 100 years, we had 28 of them. And over those 28 times, the average duration of a bear market was about 10 months, and the average drawdown was 35%. Now, if you actually go back and look at what I just told you, it seems that at least statistically, we're halfway there. And on top of that, unless we can figure out a way to make oil magically appear, it doesn't seem like we have more oil supply, which means energy prices will remain elevated for a while, which means the Fed will have no choice but to keep raising interest rates, which seems to have a negative impact on the stock market. I'm just kidding. Obviously, it is. And obviously, that's not going to be good for the stock market. So the question is, do you hold on to your portfolio right now, or do you liquidate some of it, maybe all of it? Well, let me ask you a simple question. Out of your portfolio, which is the company that you are still buying today? For me, the answer is clear. And again, this is just my opinion. Might be inaccurate, might be the ramblings of a madman. This is not financial advice, but I'm personally, out of my own opinion, buying Tesla and Palantir every single month. It's going up, it's going down. I do not care. I absolutely want more of these companies. And that's why I absolutely do not have to ask myself this question when it comes to Tesla and Palantir. Should I sell it? No, I just bought more. So the question is, if you look at your portfolio right now, Do you have any Teslas and Palantirs? And I'm not meaning literally. I do not mean Tesla stock or Palantir stock. I mean, do you have stock there which you're actively buying right now? Or if you had cash, in case you don't have any, would you buy it right now? That's the question. And the same level of analysis has to happen with your portfolio. Look at it. Look at the stocks and tell me which one of the stocks in your portfolio you'd buy today if you had the option of more cash. If you can't come up with a freaking single company out of your portfolio, that mother lover has to go. Simple as that. If you have 1 or 2 or 3 there, whatever it may be, those are the companies you keep. Don't tell me stories about free cash flow and financials and none of this shit. Tell me, would you put your money on any of these right now at the current price? And if the answer is no, there's absolutely zero sense for you to keep holding on to these companies because you have a built-in loss. That's a casino mentality. Don't hold on to virtual losses. Look at the company right now, evaluate the price, make a decision. As simple as that. Because the worst thing you can tell me is that, hey, I have this beaten down portfolio, but you know what? I have so much built-in loss, and things cannot get any worse. This is absolutely the worst it can get. Trust me, things can get worse. I've seen it in 2008. I've seen it in 2000. Things can get worse. If it's a loser, get rid of it. If it's a banger winner, keep it. It doesn't matter what the stock price did. It matters what you think about the company. Make an educated analysis. Look at the pricing power. Look at the margins. Look at the competition. Look at the capital structure. How much cash? How much debt? Look at how much operational capital requires to operate. Look at all sorts of fundamentals. Because fear and greed will be important for the next 2 to 3 months. And the market might rally. Who fucking knows? But the one thing that will matter long term is fundamentals. So analyze every single stock in your portfolio based on what the actual fundamentals are and make a decision, a purchasing decision. And then based on that purchasing decision, decide which ones of your stocks have to go. Cold analysis, zero emotions, and zero attachment to these virtual losses. Make a decision today. Do not procrastinate. As always, a huge thanks for everybody. This video will be available on Tipranks TV. Head on over there. We have so much great content for you there, and I'll be interacting with every single one of you in the comment section there as well. See you in the next video.